Today's video is all about inflation. It's about me finally understanding inflation. Now, before we go any further, I'd just like to add that this is not advice. This is information only. Now, if you like today's video, if you like the content, hit the like button and subscribe to the channel and help me get the channel out there. Now, inflation to me over the last few years has really been background noise. I sort of knew what it was, I understood it, but I didn't really understand it. And this has changed over the last few months. It's changed because I went to a network event where same kid was a guest speaker. And he was talking about crypto, he was talking about technology, what's going to be happening over the next 10, 15 years. And he was also talking about inflation and hyperinflation. And this put a bit of fear into me. It scared me into really researching inflation, trying to understand inflation. And that's what I've been up to over the last few months. And what this has done, it's improved my financial literacy. And that's what I'm going to try and do in this video. I'm going to try and nudge you towards inflation so that you understand inflation and it improves your financial literacy. So you can go out and invest, and you can invest with skill, and you can invest in a way that hedges you against inflation. It protects you against inflation. It sort of insulates you against inflation. Now, there are two types of inflation. Monetary inflation, which is QE, quantitative easing. Governments around the world printing lots of cash, lots of fake currency, like the US printing millions, billions, and even trillions of dollars, and devaluing the currency. And the other type of inflation is price inflation. So that's the price of goods and services going up. So many people in the UK and other parts of the world will be feeling the squeeze. They'll be feeling the pain in the household. The household bills will be going up, energy prices are going up, especially over the next few months. Food shopping will be going up, or has gone up over the last few months. Now, in my opinion, and many other people's opinion, the current financial system is broken. It's massively broken. And it's because of corrupt governments and central banks printing a lot of money. It's because of QE. And this is causing the citizens, us, a lot of pain. Something needs to change. We can't go on as we are. We can't go on printing money, and we can't go on with inflation, and even worse still, hyperinflation. But what's the answer? Many people, and I'm one of them, think that Bitcoin's the answer. Now, it might not be, but currently my thinking, because of my research over the last few months, is that it could help. It could massively help sort out a lot of the problems in the world today, a lot of the financial problems. Now, Bitcoin is decentralized, so the governments and central banks can't affect the price, they can't increase the supply, they can't inflate the price. There's only going to be 21 million Bitcoins available ever. It's decentralized and it's a peer-to-peer form of electronic cash, or store of value, if you like. Look into Bitcoin. If you're thinking of crypto, start with Bitcoin. Read the white paper, do some research, read a couple of books, and check out the video description. I'll put a few links in there for some of the books that I've been reading lately that will help you understand inflation and crypto and Bitcoin. As I said, understanding inflation has improved my financial literacy. Now, since I've been really looking into money and trying to invest with skill over the last 3 years, I've sort of knew about inflation. Now, I'll give you a little example. My index fund that I've been investing in since mid-2019, because of the research I've done and because of historical data, my aim was to achieve 7 to 8% on average year after year with my index fund. Now, I was factoring inflation into this, or an inflation value of 2%. So in real terms, that means I'm getting 5 to 6% if I hit my targets with my index fund. Now, this was okay until I really learned about inflation. And when you look further into inflation, you'll realise that the inflation figures are much higher than 2%. I think the official figures in the UK are at or around 5%, but they're more likely to be over 10%. So this affects your investing. This means that if I hit my target of 7 to 8% for my index fund, I'm down in real terms. So if my index fund's getting 7%, but inflation's 10%, I'm down 3%. So my money's losing value year after year. That's in this case, in this example. Now, what about property? Over the last few years, my target ROI, return on investment, has been 10%. Now, I've achieved that with a few properties. I've achieved 10%, 15%, and even 24% on one of my properties. And if I can achieve 10%, my thinking was that this is much better than a high street bank. It's much better than a less than 1%. So I'm in a good place. I'm achieving like almost 9% more than I would in a high street bank. But with this new knowledge, with this greater understanding of inflation, I know that this 10% value, this 10% ROI is probably not high enough, because my feeling, it's my opinion, that inflation's somewhere between 10 and 15%. Now, with this in mind, my new target ROI for anything I invest in going forward is going to be greater than 15%, even 20% or 25%. Now, there's no guarantees I'm going to get that, but that's going to be my target. And that's what I want for anyone watching this video. I want you to understand inflation, so then you can go out and invest and you can hit your targets. You can set a target above inflation so your money increases year after year. Your money's not eroding in time, which it would if you just parked it in the bank, because you're getting less than 1% interest and inflation's 10% at least. It's somewhere between 10 and 15%. Again, in my opinion. And again, this is definitely not advice. It's not financial advice. It's just information only from my experience, from what I've been learning over the last few months and the last few years. Another point I want to make regarding property is interest rates. Now, if inflation's rising, which it is, it's likely that interest rates are going to be rising over the next few months, over the next few years as well. Now, what can you do to insulate yourself? Now, what I do with my mortgages, the products that I get them on a fixed deal. I get them on a 5-year fixed deal, and this gives me some insulation against interest rates. But I would imagine there's many people on variable rates, so it might be worth reconsidering that variable rate because of potential interest rate rises. So I just wanted to mention that. Again, if you improve your understanding of inflation, you will think about property. You'll think about your shopping bill. You'll think about your energy bills. You'll try and hedge against inflation. Now, my hedge against inflation is trying to invest with skill, invest in property, invest in stocks and shares, and invest in crypto. And again, I'm trying to hit greater than 15% ROI going forward, so my money increases in value year after year despite inflation. Honestly, look into inflation. Look at what's happening in Argentina, Venezuela. Look what's happening in Turkey. These countries are suffering because of inflation and hyperinflation, and many people around the world are in pain because of this inflation. There's many people who can't afford the weekly shop, and this is something that we all take for granted in the UK. And who knows, inflation is happening in the UK. Who knows, hyperinflation might happen. Up until the last few months, I probably put far too much trust in the British government, in central banks like the Bank of England. Now, with my improved knowledge about inflation, hyperinflation, about governments, corrupt governments and central banks, I'm losing faith. In fact, I've got very little faith in governments and central banks, and this is pushing me towards crypto. But don't take my word for it. Look into inflation yourself. Just look at the history of money. My last video was about the history of money. And again, this is important because If you understand the history of money, it will improve your financial literacy and you can invest with skill once you become financially literate, in my opinion. Look what's happened. If you go back to that video where I'm talking about the history of money, you'll realise that inflation's been affecting people for hundreds and hundreds of years, thousands of years. Go back to the Roman Empire. Inflation contributed to the demise of the Roman Empire. Look what happened after the First World War when hyperinflation had a massive impact on Germany. It happens time and time again. It's happening now with the US. They're printing trillions of dollars. All I'm doing in this video is trying to nudge you towards understanding inflation and nudging you towards investing with skill. Why not try and invest in property, stocks and shares, commodities, or even crypto? At least be open-minded and don't put your money in high street banks, because that less than 1% interest is no good. It's definitely no good with the way inflation is. Inflation, in my opinion, is above 10%. So don't accept less than 1%. Go away and do some research. And again, there'll be some useful links that will help you with personal finance and investing in the video description. That'll do for today's video. If you've liked the content, again, hit the like button, subscribe to the channel and help me get the content out there.